5 MCQ related to balance sheet. Question 1. What does the balance sheet primarily show? You have 4 choices. Profit and loss of a company. See, that is the job of an income statement. Company's cash flow is the job of a cash flow statement. The company's financial position at a specific point in time. I think this is the answer. Yes, because balance sheet will list out what are the assets, liabilities and equity, which basically communicates the financial position. So what does the balance sheet primarily show? The answer is item number C. You can see here the company's financial position at a specific point in time. Question 2. Which of the following is included in the liability section of a balance sheet? You have 4 choices. Cash, this is basically an asset. Retained earnings, this is not a liability. This comes under equity because this money basically belongs to the owners. Okay, then comes accounts payable and inventory. In that, inventory is an asset, so accounts payable is a liability. Basically it is a current liability payable to vendors or other outstanding expenses. Okay, so the answer is item number C, accounts payable. Question 3. Assets are generally classified into which 2 categories on a balance sheet? You have 4 choices. A is current and fixed. No. Fixed means that focuses only on fixed assets. But in business, apart from current, you will also have some other broader assets. So A is not the answer. B, tangible and intangible, which is basically part of fixed assets. C is long-term and short-term, and D is current and non-current. So the correct technical term is current and non-current. So the answer is item D, current and non-current. Question 4. Which of the following is not considered as current asset? Let's see. Accounts receivable. Generally it is a current asset because it's a result of credit sales, and generally the collections will happen within a period of 30, 45, 60, 90 days. Cash is already in current asset because the very definition of current asset is those assets which can be converted into cash. So cash is already a current asset. Inventory is also a current asset because that will get consumed in the normal operational cycle, working capital cycle. Unless and until that inventory have become obsolete, then it will get classified under non-current. But generally machinery is a fixed asset, generally. Okay, because generally we assume that machinery will have a longer life, it will give future economic benefit. But the same machinery can also be classified as an expense, or it can come under current asset if that business is in the business of buying and selling machineries. In that case, they will not call it as machinery, they will call it as inventory. Okay, so here the answer is D, machinery. And the last question, in which section of the balance sheet inventory is classified? You have current assets, current liability, long-term assets, owner's equity. Owner's equity, inventory has got nothing to do. Long-term assets means they take longer period for getting conversion back as cash, or they are going to be used in the business for a longer period. Inventory is not meant for that. And current liabilities have to be repaid within a period of 1 year. So the only leftover choice is current asset, and current assets are those assets which can be converted into cash within a period of 1 year or operating cycle, whichever is longer. And inventory, when it fits under that definition, it gets classified under current assets.